Hey guys, welcome back to the channel. In today's video, we're going to talk about stock splits. In particular, we're going to talk about Zion Oil and Gas, and if they are going to do a stock split, what are some possible scenarios, what is a stock split, and how it actually can benefit people down the road who are longer term investors. So just to reiterate, guys, I'm not a financial advisor. Make sure that you do your own research before investing. Also, if you find value in today's video, smash the thumbs up button, subscribe to the channel if you enjoy our content, and hit the notification bell. That way YouTube can let you know every time we release new content. So guys, let's dive right on into it. All right, guys, so if you remember my video from last week, this is the Zion Oil and Gas shareholder meeting recap that we talked about. And one of the things that they asked, this was the Q&A that Zion Oil and Gas had. Someone asked, would you consider doing a 2-for-1 stock split for investors if you're going to increase the amount of outstanding shares? And they said, well, yeah, we would possibly entertain it. Okay, but it kind of left it open-ended. They didn't talk too much about really anything as far as if they're going to issue new shares, if they're going to do a stock split, when they're going to do it, what their plans were. They were just saying, well, of course we would, potentially entertain it. So it comes to question, what is a stock split? Would it actually be good for us? And what would be the purpose of them doing that if they would increase the share in relation to taking care of their shareholders? Well, basically, they talked about and they approved the ability to increase their number of outstanding shares basically by doubling the amount of outstanding shares, which would then basically cut everyone who owns Zion Oil and Gas's stock, their equity, in half, right? So basically, the 2-for-1 stock split could basically take you right back where you started before they issue those type of shares, if that makes sense. Okay, so we're going to talk about what a stock split is. We're going to go over a couple of different examples, and I'll give you my opinion on if they would possibly do it, what would be the scenario. Okay, I could be completely wrong, of course. This is just my personal opinion. All right, so a stock split. What is a stock split? A stock split is when a company divides the existing shares of its stock into a multiple new shares to boost the stock's liquidity. Although the number of shares outstanding increases by a specific multiple, the total dollar amount of shares remains the same compared to pre-split amounts because the split does not add any real value. The most common split ratios are 2-for-1, 3-for-1, and sometimes denoted as 2-to-1 or 3-to-1, which means that the stockholder will have 2 or 3 shares after the split takes place, respectively, for every share that they held prior. Okay, so for example, if I hold 1,000 shares of a particular stock and they issue a 2-for-1 stock split, that basically means they now multiply my my current shares that I hold by 2. So 2-for-1. So for every 1 share, I now have 2. So now I have 2,000 shares of that company. Okay. Now what happens to the price is it basically gets knocked down and cut by whatever that multiple is. So like if the share price was $50 and it's a 2-for-1, I would divide 50 by 2. So now basically the price per share is not $50 anymore. It's now 25. Okay, but your value of that company, of that holding, is still going to be the same. Let me show you what I'm talking about. If I hold 1,000 shares at $50 a share, I still have a value of $50,000 in this particular play. All right, so now let's say, for example, we do a 2-for-1 stock split, and instead of 1,000 shares, I now have 2,000. Okay, but it also cuts the price in half, basically to $25 a share as opposed to 50. So I now have 2,000 shares valued at $25 a piece, still valued at $50,000. Okay, so that's basically, in a nutshell, what happens right there. So let's keep on moving, and we'll come back and do some other examples after here. So it's how a stock split works. A stock split is a corporate action in which a company divides its existing shares into multiple shares. Basically, companies choose to split their shares so they can lower the trading price of the stock to a range deemed comfortable by most investors and increase the liquidity of the shares. Most investors are comfortable purchasing, say, 100 shares of a $10 stock as opposed to 10 shares of a $100 stock. Thus, when a company's share price has risen substantially, many public firms will end up declaring a stock split at some point to reduce the price to a more popular trading price. Although the numbers of shares outstanding increased during the stock split, the total dollar value of the shares remains the same compared to the pre-split amounts because the split does not add any real value. That's what I was just showing you on the calculator there in a second. Okay. So let's keep going here. So reasons for a stock split. Why do companies go through the hassle of and expense of a stock split? For a couple of good reasons. First, the split is usually undertaken when the stock price is quite high, making it expensive for investors to acquire a standard um, board of 100 shares. Second, a higher number of shares outstanding can result in greater liquidity for the stock, which facilitates trading and may narrow the bid-ask spread. Increasing the liquidity of stock makes trading in a stock easier for buyers and sellers. Liquidity provides a higher degree of flexibility in which investors can buy and sell shares in the company without making too great of an impact on the share price. Added liquidity can reduce trading slippage for companies that engage in share buyback programs. For some companies, this can mean significant savings in the share price. So when I think about stock splits, the best example I can give you is Tesla. All right, Tesla announced that they were going to do a 10-for-1 stock split, which is amazing, right? And their share price was, probably roughly about $1,500 a share when they announced that. And it basically went all the way up to $2,000 a share pre-split. Okay. And what happened was when it got to about 2,000, once it split, it dropped the price down to $200 a share. All right. And it created more liquidity, more buying opportunities for someone actually like me because I kept watching Tesla and I missed that huge run when it went all the way up to 1,000 and beyond. And I said, man, I'm not buying a share of a company for $1,000. I just can't do it because I don't think it's going to make, I want to buy at least several shares of a company to kind of make it worth my while. But when it went down to 200, that basically got it more attractive to me. So I could actually afford this now. Okay. And a lot of other people as well. And fast forward to today, it's now trading at over $600 a share, probably going to get back to closer to 1,000 over the next, 18 to 24 months minimum, in my opinion. So that's like the best example I can give of that stock split. So and you make a lot more money that way if you are in the stock pre-split, right? So if I had shares of Tesla early on, I say I had 5 shares valued at $2,000, and that's a $10,000 investment, right? And then what happened was my 5 shares, I multiplied them by 10 because it's a 10-for-1 stock split. Okay, and then again, let's say that the stock price dropped down to $200 a share, so I'm still valued at $10,000. All right, but now those 50 shares that I have, if I fast forward to today, and it's valued at $600 a share, that $10,000 investment is now worth $30,000 because I was in before that split, okay, before the split happened. So for us, for Zion Oil and Gas, most of us right now are in a really good position because the stock price is super low. Some of us have been investing for a long time, and most of everybody that I hear has like 10,000 shares or above, right? And for those of you who are in it for the long term, I do think this would be something for the long term. I don't think they're going to hurry up and do a stock split or anything like that. The share price is way too low. I'm thinking, years down the road, they find oil, they're producing revenue, their, stock price is closer maybe to like $100 or something. That's whenever they may say, I'm going to do a stock split. And once the company is well established and generating all that revenue, that's just my personal opinion. Could happen, sooner, but it's not going to happen anytime like tomorrow because the stock is only at, trading at like 30 something cents a share. Okay. But just know that a stock split can be a good thing if you're in early pre-split, right? So for those of us who are in now, I think it'd be smart to take some profit off the table, which is what my plan is, and still keep a position in place for if and when that stock does get to the 20, 30, 40, $100 that some people, expect longer term. And then whenever they do that split, you just stay patient. And then whenever it eventually attracts new investors in, once the word's out, it's going to bring it back higher up, which only making your investment more valuable. So anyway, guys, I just had a couple of questions on stock splits as far as in regards to Zion Oil and Gas. I just wanted to provide some insight as far as what a stock split was, what are some reasons, and for Zion Oil and Gas, their reason could basically be a really either or, right? It could be for liquidity, most likely is what they're going to need to do it for to, and they've already said that that's why they would issue new shares is for liquidity to raise more money for additional wells to do testing and things like that. And so it's not going to be anything to do with the share price, rising exponentially in the near future. So they may actually increase their number of shares way before you get any type of stock split. So just kind of keep that in mind. That's just my opinion. But other than that, guys, I just that's all I have. So catch you in the next video. I appreciate you watching, and we'll talk to you soon. All right, guys, that's all I have for you in this video. Make sure that you smash the thumbs up button if you found value in today's video. And if you enjoy our content, of course, subscribe to the channel and hit that notification bell. That way YouTube can let you know every time we release new content. Other than that, guys, we'll catch you in the next video.